Hi, you're watching TheStreet.com TV. I'm Simon Constable, and today I'm joined by CPM Group Managing Director Jeff Christian. He's here to talk to us about silver. Welcome back to TheStreet.com, Jeff.
Thank you.
Here I have the CPM Silver Yearbook 2007. You're going to talk about that today. What's new?
Well, the big change in the silver market this year is that in 2006, investors shifted from being net sellers of silver to being net buyers. Between 1991 and 2005, investors were net sellers of silver. People who had bought silver in previous years selling silver because the price was down and everything. As the price has risen, that selling has dried up and other new investors have come in. And in 2006, investors bought more silver than they sold.
So that's a very positive thing, and you're expecting that to go on forward?
Yes, it's a very positive thing. It's happened twice before in modern history. In the early 1960s, when investor demand for silver caused the U.S. government to withdraw silver from circulating currencies, and in 1979, when the price went from about $5.90 to about $50 over a course of 12 months.
So this is very auspicious then for prices, I would guess.
It's the big shift in investor attitudes that we've been waiting for.
Okay.
And it's happened, as I said, twice before. We think it's going to continue at least into 2007 and 2008. We think that investors will be buyers of more silver this year than they were last year. And we think that that will probably have a very sharp upward effect on prices.
So what are the critical factors that are causing that buying?
Well, investors are buying silver for a lot of the same reasons they're buying gold. They're worried about political situations, especially in the Middle East and India. You're seeing a tremendous amount of demand for silver. They're buying silver for economic concerns. They're worried about the dollar. They're worried that the stock market can't sustain recent gains. They're worried about inflation and or recession. So there's economic and political factors, and then they also look at the silver market and they say this is a very tight market. The price is rising, and let's be honest, investors tend to chase prices higher and lower.
So how far do you see it going? It's now around about $13, $14. Where do you see it going?
The economic analysis suggests that the price could go, $17, $20. But if you go back to 1980, the economic analysis probably suggested that the price could go to $17 or $20, and it went to $50. If you get into that kind of spiky mentality, it's hard to say where the price could go. But on an economic basis, 17 to 20 probably is a good target.
And possibly a huge overshoot.
Yes.
Any immediate dangers you see?
Well, the major danger, because if you think about it, what's caused the price to rise, for the price to fall, the major danger would be that you'd have peace break out in the world, and people would say, we don't need to protect ourselves with silver.
And economic bliss.
Exactly.
Thank you for joining us, Jeff.
Always a pleasure.
It's been Jeff Christian of CPM Group here talking about the CPM Silver Yearbook. It's available from Wiley, $150. Stay tuned for more.